What's going on, guys? My name is D. Anthony with evolutiontraders.com. In this video, I want to give you guys an easy strategy. I've gone over this strategy dozens of times in my private community as well as YouTube, but I think that it always kind of helps when you see the strategy being implemented on different days, on different tickers, to know that, this is not something that just works one time, right? It's not something that maybe you get lucky on, maybe you hit, maybe you don't. Strategy is very, very consistent. However, you as a trader have to be very, very consistent as well. So all it's going to entail is a couple of things. Regardless of your account size, what you do want to make sure that you're doing is, for one, trading stocks that you can afford, right? So you want to be able to trade those stocks that, contracts are not going to be 60-70% of your total account size, right? And then you can take one trade, and then if that trade doesn't go in your favor, you're forced to kind of hold that trade, hoping that it comes back. And then next thing you know, you're just down a lot of money and mental equity when you don't really need to be. So, if you have a smaller account, maybe choose something like the S&P 500, maybe AMD, maybe Apple. Trade 1-2 contracts. If you can buy 6 contracts total or 8 contracts total with your total account size, maybe you want to trade 1 contract. That way you can be able to, take 2 or 3 trades if need be. Now, the only rule that I'm going to recommend with this is that if you get a move in your favor, right, and then let's say, for example, it fails and it goes against you, make sure to just cut the trade. Understand that you can still take another 1 or 2 trades if need be. Also, second rule, kind of part B to that, is that if you take 2 losing trades back to back, just call it a day, wrap it up. There's always going to be another trading opportunity on another day, right? So a lot of times traders, they get into a position, they go into some drawdown. They don't want to end up losing, right? They don't want to end up losing. And then what they do is they hold that position. And when they should have cut based on the strategy, based on the technical analysis and the price action and stuff like that, supply and demand, they're kind of holding now, looking for new levels to find support or find some resistance, depending on if you're long or short. Let's get right into the strategy. We're going to be using the S&P 500 chart. I know a lot of people love to trade the S&P. A lot of people like to trade the triple Qs, which is the NASDAQ 100. We're going to be using the 5-minute time frame. The only indicator that we're going to have on our screen is going to be this 20 SMA, okay? Very, very simple. All we're going to do is light shade gray here is going to be pre-market. Darker shade gray here is going to be the market hours. All we're looking for is a change in direction, okay? So we're looking for something to be trading underneath the 20 SMA, close over the 20 SMA. Then this is going to now become our pivot. Our pivot becomes $446. You can see here in the pre-market, we were trading below this 20-period moving average. We do get a nice green engulfing candle the first 5 minutes of the market open. We do get that close over the 20 SMA. This now becomes our pivot. All we're looking for is just a confirmation, right? We're looking for a confirmation over the previous candle's highs. This candle is going to be our entry price, and then we're just going to take those calls and sell on the way up. Now, my rule of thumb is that depending on your account size, for example, if you have a smaller account size where you're going to trade 1, 2, 3 contracts, if you get a move in your favor, 15, 20, 25%, I would always start to take those profits, whether you're taking 3 contracts and you sell 1. But definitely understand, guys, if your contracts go in a matter of 5 to 20 minutes and they go up 30%, 40%, and you do not take profits, it is your fault that you are losing trades, okay? I want to repeat that again. If you get into a trade, even if you're not using this strategy, you're using your own strategy, you're using a different strategy, and you go up 30, 40% on options contracts, and you do not take profits, you deserve to lose, right? Not saying that you have to sell out all of those contracts, but make sure you're locking in some profits along the way, moving up that stop loss, breaking even on your stops, or respecting the actual strategy and getting out when you're supposed to get out. If you look at this play here, it not only did it go up, but it went up from a price of that pivot of $400.46 all the way to a high wick of $402.73. Now, you're never going to catch the high wick here. You could have sold anywhere along the way, but as long as we are holding this 20 SMA, you're going to continue to hold these calls. Now, if you want to ride the strategy all the way out, you would be out here on this candle when we get that first close below the 20 SMA, and that price would have been $401.85. Again, from an entry pivot of around $400.45, you would have made decent money here, even if you did not sell at somewhere closer to the top and you waited for it to kind of backtrace. My rule of thumb is like this. If you're up 10, 15, 20, 30% on your options contracts, you start taking profits. I don't care if it goes up, another 1,000%. That's not my money. You always want to leave some of that meat on the bone for another trader. Here is the second setup here. We get that first close below the 20 SMA. Remember, same rule applies here. The only thing we're looking to do now is go short. Now, guys, also, if you come into the market and you are super heavily biased, meaning that you're only going to play calls, you are going to absolutely destroy yourself. As a day trader and a scalper, you need to be able to go long. You need to be able to go short, because sometimes you're going to get those days in the market where it's kind of sideways. Some days you're going to get those range-bound trading days where you're going to be able to buy calls at support and buy those puts at resistance and kind of just play it back and forth all day. As we can see here, we started getting a little bit of a supply zone here with some price action going sideways. As soon as we did lose this 20 SMA, your pivot becomes 401.73. We get the confirmation 10 minutes later here, and we go from a price of 401.73 all the way down to a bottom wick of 399.77. Again, you're never going to catch the whole move, right? So what I recommend is 2 to 3 pushes down, or that 15 to 30%. Again, if something goes more than 30%, should be on runners only, but the bulk of your position should be selling out at 20, 25, 30% if you get that move. I've never met a trader who is going to blow up an account or lose money consistently if they're constantly taking 20%, right? If you can find those 20% hitters, you're going to be in this business a very long time, and that's what it's all about here. You can see the next setup that comes here. We get this right around 10:25 Pacific Standard Time. That pivot becomes $400.68. We get the confirmation on the next 5-minute candle, and this goes from a price of $400 and around 65 cents all the way 5, 10, 15, 20, 25, 30 minutes. On the 35th minute here, not only do we get the breakdown here, which is going to shake out a lot of newer traders, but again, remember the rules. As long as we do not close below the 20 SMA, we remain in this trade, even though, yes, we are in a little bit of drawdown here. And then we get this massive explosion. Now, obviously, today, this explosion candle came off of those FOMC minutes that got released at 11 a.m. Pacific Standard Time, 2 p.m. Eastern Time. But you would have already been in this trade long, right? So you would not have been chasing this big green bar, buying all the way here at the high of day. You would have already been in this trade because your setup and your strategy would have put you in this trade about 30 minutes prior. This goes from a price pivot point $400.67 all the way up to a high of 402.82. Fantastic money here. You could have just ended your day there. In fact, you probably could have ended your day here on this first trade if you would have taken a second trade, if you would have taken a third trade. Again, remember what I said about having enough capital and trading ticker symbols where you can be able to afford 2-3 trades if need be. Now, if you could afford, even if it's only one contract, but even if you can afford 3 contracts for 3 separate trades on SPY, you would have had 3 for 3 winners on the day, and you would have been very, very profitable, and you would have went into the holidays tomorrow a very, very happy man or woman and been able to come back with a clear mind on Friday. Again, guys, please use this strategy. I've been using it day in and day out for, years now, right? It feels like decades, but years. I've only been trading full time for about 6 years now. Total as a whole, just going on 7.5 years. So I've been through all sorts of markets, right? Obviously, this year has been a very, very bear market. We've had short bear markets, the COVID crash. We've had great run-ups. We've had, pump and dumps, SPACs, meme stocks, so forth and so forth. But, we're not in that type of market right now. So you're going to need to actually practice better risk management. And you're going to be able to need to trade some of the bigger names, right? Like your SPY, like your Tesla, your triple Qs, your NVIDIAs, your Apples of the world. You're going to need to be able to trade these mega cap stocks. It's not always about trading, the next best 1,000% to the moon stock. You have to be able to trade the grinders. Now, Wall Street loves these grinders. These grinders are going to be stocks like Tesla and Microsoft and Apple and Meta and NVIDIA and AMD, Amazon, triple Qs, the SPY. They're going to love to trade these grinders because the volatility is there, the liquidity is there, and the price moves phenomenal when you understand price action and you have a good game plan set in place. I hope you guys enjoy this video. I hope you guys use this strategy. If you do, make sure to come back. Again, give yourself a series of 5, 10, 15 trades. Run through this, right? Just how I explained it. Run through a series of 10, 15 trades, okay? Then from there, analyze what did you do wrong? What could you do better? What was your win rate, right, on your winning trades? Now, if you did have some losing trades in there, let's say, for example, we're breaking it down. Out of 10 trades, you had 6 winners and 4 losers. But on those 4 losers, one of them you could have actually cut sooner, but you let your emotions get to you and you gave it more leash, and then it caused you to go into a bigger drawdown. Then that's what you want to focus on. Focus on what your weaknesses are and get better at them. The strategy is the strategy. Things are not going to change. If you can just operate very, very methodical and very, very robotish, right? Where you're not going to be so emotional when, things are going down and going up and you have such a strong bias. Just get out of the trade if it doesn't work. Understand, hey, I've got enough money to take another trade. There's always going to be another setup. I'm always going to be able to make that money back. Now, you do not recover when you let your emotions get to you and you hold in those big, large drawdowns, and now you're hoping and praying that the stock comes back in your favor. If you can only take one trade a day, right? Meaning, let's say, for example, I'm taking 6 or 7 contracts of the SPY. And if this one particular setup that I take does not work, I am going to be A, in big drawdown, and B, not able to take another trade. You are oversized. Okay, size down, go to 2 contracts. That's going to allow you to be able to take 3-day trades if some things don't go your way. If you can only take 2, then maybe you want to go down to 1 contract, right? Yes, it's not going to be the most flashiest gains, but it's going to be the most consistent and relevant gains that is going to keep you in this business for a very, very long time. I hope you guys enjoy this video. By the way, my name is D. Anthony with evolutiontraders.com. Make sure to join the Discord. See you guys all in the next video.